Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you as always for coming on the program.
Good afternoon.
Well, stocks in New York closed significantly higher overnight despite expectations for a big rate hike by the Fed this month. That would suggest that 75 basis points is priced in and investors were buying the dip. The Dow up 1.4%, Nasdaq more than 2%. What's the story in the global markets?
Yes, look at the U.S. market. Dow Jones climbed more than 400 points on Wednesday, and S&P 500 up 1.8. Nasdaq surged 2.1% to snap 7-day losing streak after a decline in the Treasury yield, and also oil prices eased the concern about the inflation and interest rate. If you look at the yield on 10-year Treasury note, it fell below 3.3%, halting a rally towards multi-year highs. We were saying that the interest rate should be stabilizing at somewhere between 3.25 to 3.5% on back of the high level of the debt to GDP ratio of the U.S. government. And clearly we are seeing some stabilization in terms of the interest rate. And also we saw quite sharp drop of the oil prices falling to $82 level, allowing that people are less worried about the inflationary pressure in U.S. If you look at the what Fed Vice Chair Brainard have said, she's talking about how the risk of interest rate going up too high is a problem, although she also assured that central bank would continue to fight the inflation as long as needed. And elsewhere, the Fed, Loretta Meister, said that she doesn't expect the economy to fall into recession, but the risk of that happening are rising. So clearly there's a mixed signals. Continuously raising interest rate will cause the economy to slow down, and maybe the size could be to the level that economic recession could happen. But we don't think that that should be happening as long as inflation comes down and the Fed stops to raise interest rate once the interest rate reaches well above 3% territories. After a 75 basis point rise in September 21st, if that happens, interest rates should go up to 3%, and clearly that is well above the neutral rate of 2.5%, and we think that inflation pressure should be coming down. All that means is that for the time being, the volatility is expected because we're not sure of the inflationary pressure and how much the interest rate will be raised. But we think that a lot of the negative news are already priced in, and therefore most of the share price will be following what happens to the earnings. And most of the companies are trading on the basis of what happens to the earnings that what we've seen in the second quarter and maybe the expectation of third quarter.
Well, today, coming off those gains on Wall Street, Korean stocks were higher too. The KOSPI by about 0.3%, the KOSDAQ about 1.25%. The exchange rate still extremely high at above 13.80 to the dollar. Tell us about the domestic market.
Yes, if you look at the KOSPI, it was up by 0.33%, and KOSDAQ was up 1.25%. However, the KOSPI rise was much less than what we saw in the U.S., and clearly this is because of the currency movement as well as the short-term trading mentality of the futures market. And today was futures and options market close right before the Chuseok holidays. And therefore, the foreign investors have net purchased huge amount of the futures in terms of shorting. So I think that it caused the market to go up very much less than it should have. If you look at foreign investors, they sold 651.5 billion won worth of Korean KOSPI, clearly resulting into the much less rise than hoped for. While they were net buying of the KOSDAQ market by 114.9 billion. So clearly there's been a trade-off in terms of selling KOSPI and buying KOSDAQ. In terms of the institutional investors, they are the major net buyer of the both market. They bought 501 billion won of KOSPI and also 78.8 billion won of KOSDAQ. If you look at the overall trend of interest rate, it has hit the 10-year high of 3.8%, 3.7%. Clearly, this is causing the uncertainty. And also, if you look at the yuan currency, it did depreciate it to 138 yuan plus. It declined slightly today, but nevertheless, still it is a record high level since the April of 2009, and clearly the uncertainty remains. And also, the numbers like current account surpluses slumps in July to 1.09 billion, and because of the huge rise in the oil prices and the deficit we're seeing in the trade side. However, if we look at the overall oil prices, it has come down quite significantly, and therefore we think that the trade numbers should be gradually improving. I think the one concern obviously is the currency movement, but once the U.S. start to raise interest rate at a slower pace, we think that dollar index should be depreciating rather than appreciating in the future. If that's the case, Korean won should appreciate as well, and foreign investors should be coming back to the Korean market more aggressively, and that should have a positive implication in the medium to longer term basis.
Right, and now in the meantime, oil prices coming down significantly today to the lowest point since January. WTI future is down almost or about 5.7%. Driving this is concern about a global economic slowdown combined with the very strong dollar. What do you see happening with oil prices?
Yes, if you look at the WTI crude futures, it steadied continuously at 8-month low, around $82 per barrel on Thursday, after tumbling almost 6% in the previous session, as the weakening demand outlook driven by the aggressive monetary tightening and persistent economic concern in top importer like China continues to grip the energy market. Clearly, major central banks are continuing to raise interest rate further to combat inflation, and obviously that should cause the oil prices to come down. Dollar strengthening also have a negative implication for the oil prices movement. Also, if you look at the crude oil stock of U.S., it rose to 3.645 million barrels in the week of September 2nd, compared to the market forecast of 0.733 million barrels. So clearly much higher buildup of the inventory is making the prices to come down even further. We think that gradually the oil side will be, as I said, it is expected to go down even further to $75 per barrel WTI standard, and trading ranges should be anywhere between $75 to $85 in the medium to longer term basis. At least continuation of a sharp rise that we saw in the second quarter in oil prices should not be the case in the third quarter, maybe into the fourth quarter as well. So that should have some relief to the inflationary pressure in a global scale.
Well, that would be good to see. Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program, and have a happy Chuseok.
Happy Chuseok.